Good morning, everybody. It's the 3rd of December. We are Signal Centre talking ball on this fine Friday. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Good morning, mate.
How you doing?
Not bad.
How you really doing?
Yeah, struggling a bit.
Superb.
Yes.
Okay, let's get stuck in then, so we don't drag this out any longer than we need to. There was a little bit of stabilising in the market yesterday. The Omicron variant continues to surge in South Africa, but traders are still awaiting greater clarity on the impact of it. And I guess we know it's highly transmissible, but what sort of impact will it have on hospitalizations, deaths, etc.? Hopefully, not as much. But in terms of what's going on elsewhere, there was not really much on the news front, to be totally honest. We had Nvidia proposing a takeover of UK-based ARM Holdings. The deal has been blocked by antitrust officials, saying that it would hobble innovation in semiconductors and undermine Nvidia's rivals. So we'll wait and see what's happening there. Looks like the deal is pretty much going to collapse on the back of that. We had the UK's ruling Conservatives won their first electoral contest after an especially bruising period for Boris Johnson's government. I don't think the turnout was particularly great, however. We also had Warren Buffett's right-hand man warning investors that markets are wildly overvalued in places, and that the current environment is even crazier than that of the dot-com boom back in the late 90s. That's from Charlie Munger, 97. He's seen a few things. He also went on to say he wished that cryptocurrencies didn't exist. So he'll be riling a few people on the back of that, I would have thought.
Yeah, he's a man after my own heart. And when you said Charlie Munger 97, I thought that was his tag name. That's actually his
No,
age, is
he's
it?
97 years old. Yeah.
Wow. Well,
Why
I
hasn't
mean,
he
he
just
must.
retired?
Well, that's it. There's no such thing as retirement nowadays, Joe. You just sort of like work till you drop, and he hasn't dropped at 97. Going
No.
strong. Nice one.
Good lad. Yeah. So yesterday, OPEC Plus decided to maintain their 400k per day barrel increase in production from January. So that did a good job of lifting prices on the oil front as well. So let's get stuck into some charts. Steve, do you want me to kick off today, or are you good to go?
Yeah, you kick off, mate, and I'll have a little browse.
Okay, so we've got dollar index on the front foot today. That marks what could potentially be the third day of gains for dollar index. But we have, as we've discussed, seen some quite volatile sessions. We did see a break above this uptrend channel, and now we've seen prices sort of stabilise in and around this kind of region, around about 96, the 96 level. Still looking for upside targets around about 97.70 on the downside. I think we could see maybe a correction towards the lower end of this channel, and these two supports that we've got at 94.74 to 94.47. So overall, still bullish on the dollar index, and we did see a little bit of a push higher on that yesterday. But interestingly, we have seen it not act as a sort of traditional safe haven as you would expect, given the sort of spikes in the news around Omicron. In fact, investors and traders seem to be more favouring things like euro and the Swiss franc and the Japanese yen. But overall, I think it still looks pretty bullish here. So looking at euro US dollar, I think overall people are still favouring dollars over euros, and we can see that at the moment on the chart. It's a very persistent downtrend. We did see a little bit of a bump higher in prices over the last few sessions, but that seems to be fading now. And I think we may see, a continuation lower. I think it is still a case of selling into rallies here with the euro against the US dollar. If we take a look at euro sterling, the gains seem to have been a bit tempered as well in the last couple of sessions. We saw this big move from the lower end of the channel and these support levels down here. Yesterday we posted a nasty red looking candle following a kind of doji candle from the day before. So a bit of indecision there. Ultimately, the trend remains lower, so expecting lower prices and for upside to be capped. The riskier currencies are on the back foot a bit today. This highlights that there is a decent amount of appetite at the moment for Japanese yen. Obviously, that's been pretty much smashed over recent months, but against the Aussie in particular, we are seeing more money flood back into the Japanese yen versus the Australian dollar, and that continues to move lower. In terms of the big support zones, around sort of 78 to 77.90 looks to be where we could be targeting on that, and that could potentially form some sort of larger top pattern. Aussie US dollar was an interesting one. Earlier in the week, we were highlighting this big support level at 71.05. Had this reference here from the 20th of August. We posted some sort of doji and hammer candles over the last few sessions, but that's given up, and we've seen a pretty clean break to the downside with this one, and we still are trapped within this really narrow downtrend channel, and it looks like lower prices are set to persist there. So a continued shunning of riskier assets or commodity currencies, it would seem, at the moment, and I imagine it's the same situation with New Zealand as it is. We saw some support form around 68.05. Looked like we might see some mild buying interest and a potential for a bounce, but it's given that up and we are moving lower. In fact, very close to taking out that low that we posted on the 30th of November. And that would just signify that we're likely to see a continuation lower in that currency pair. Let's have a look at dollar yen. That was quite interesting a few weeks back because it looked like it had broken out of a bullish flag to the upside, but then we saw this big red impulsive candle to the downside on the back of the Omicron variant being identified, and since then prices just haven't really done an awful lot, so limited opportunities I think on that one for now. I think that's pretty much it on the currencies for me today, so I'll hand it over to Steve and see what you're seeing.
Yeah, just sort of going over that dollar index. It's this is my weekly chart, which we highlighted this level back in September, the break of the double bottom formation.
Yep.
The targeted move is up to 97.72, which is also the 61.8% fib retracement. So that's the sort of like the way that technical is playing out. But obviously that weekly chart from last week doesn't look great. But we are getting that follow through this week. Impacting on oil somewhat, we've still got this long-term bullish flag that I've highlighted on the weekly chart.
That's gold, right?
Sorry, gold. Did I say oil again? So we've had the last 3 weeks have been negative for gold. We had this reversal from a high of 1843. I've redrawn this flag formation. It's got the two resistances there. Really needs a third point, but yeah, under a bit of pressure on the short-term basis. We've got a daily chart here which shows a break of the this mild upward trending support line. We're under there now, so really sort of like focusing on the 1755 support, below that 1722, and obviously 1677, which is the main support which we've held on 3 previous occasions. Really needs to get above the sort of 1815 level to sort of like reignite the upside potential. On oil, obviously we had this huge sell-off. I mean, quite a decent move overall from a percentage basis. 26% sell-off from the all-time high, well, not all-time highs, yearly highs, $85 all the way down to $62.30 in the matter of a month. So that's pretty decent going. Well, it's 29 days, so not quite a month. It's just over a month in terms of weekends and everything. But yeah, stalled in front of this support. We've got this decent support we're looking at here. Let's get a couple of nice blue arrows to remind us. That also formed a sort of like interim, some type of double bottom, although it was mid-trend, so it doesn't really count. It's normally when we get a trend down into holding and then we get a double bottom form. This is like just a decent support level that we've stored in front of. So a nice bullish hammer to sort of like to recover from. Like you say, I wouldn't get too carried away until we get maybe above the $75 area. Really need to recapture that ground for the bulls to get excited. The MACD is slowing down on the bearish side, so wait to see how that plays out next week. On the cryptocurrency side, we got Bitcoin still remains under some pressure below the 60,000 level. That's for me the pivotal level where we should see If prices move above that, we got a MACD potential crossover here. If prices do move above that, we could open up an attack on the upside to the all-time high at 69,000. However, we are getting lower highs, so it's not looking great. Really, if we get a break below the 52,700, again, that'll open up the downside a bit further. So mildly negative or sideways on Bitcoin at the moment. Taking a look at indices. Yesterday we saw price action recapture ground on the FTSE above the 71.25 resistance, which we had in place. It kept breaking it. It's now trading above there, although overnight we have seen prices fall back from the highs. It stalled around the 50-day moving average, which comes in at 7,200 on FTSE, and retraced quite aggressively from there. DAX, similar sort of price action. We had this big Marabuzo candle of price action from last Friday, and since then we've just it's been quite spiky. We've got spikes in both directions, but we've really settled in around this like midpoint, around about the 15,300 on DAX. Keeps stalling close to the 50% retracement of last Friday's price action. So it still remains for me a slight negative slant on the European indices. Again, Dow recovered. Buyers came in front of support, and a nice bullish engulfing candle to finish off yesterday's price action. Today, we've seen prices stall again. 34,750 seems to be the sort of like the line in the sand at the moment, and but we're still way below the 50-day moving average, so still has a negative slant, although after yesterday's price action it feels like a really strong recovery. It's amazing how your mind gets swayed just by sort of like seeing that sort of price action. In Nasdaq, we're in the midst of an ABCD correction. Could have bottomed out. We got down to 15,763, stalled there. Retraced yesterday, hasn't recaptured the ground from the 1st of December. So that's remained a little bit pressured. So not really getting that sort of the recovery that we got in the Dow. S&Ps also recovered ground yesterday, similar to the Dow, but still holding in this sideways pattern. We can have a look at the 4-hour chart. We are in bearish territory from a Ichimoku cloud perspective, and it's quite a nice choppy trend lower. We're still posting lower highs on a 4-hour chart. So although it feels like a bit of a recovery from the 4,500 level, it's not a great recovery. So still sort of in bear territory for me on the US indices. Aussie 200, similar sort of price action, holding just below the Ichimoku cloud. We've got a level at 72.90, a break above there, and a close above there on the 4-hour time frame should open up further upside. Otherwise, we could be back to revisiting the 7200 support. China 50 has, currently posting a shooting star type candle, so be aware of that. Stalled at 15,630 and currently trading at 15,565, just above the 4-hour Ichimoku cloud. Quite a nice little view of this sideways price action we've really seen since the start of November in China 50. Hang Seng still under pressure and looking a lot more bearish than its counterparts in Asia. And finishing off with Nikkei, again under pressure. We seem to have stalled and posted a lower high yet again. So overall, although it does feel like a bit of a recovery, I think there's still nervousness out there with the Omicron variant. So yeah, going into the weekend, again, doesn't feel like it's something I want to be long of in the indices.
Cool. I noticed the pronunciation as well, Steve. That stuck with me after you mentioned it yesterday.
Yeah, I heard it on the radio. I'd love to plug the station that I heard it on, but I don't remember. But it was Omicron. That's how you pronounce it.
So like, oh my God.
Omicron. And obviously it's an anagram of no crimbo. So
yeah, perfect. Or moronic, as we
or
saw
moronic,
as well.
yeah.
Yeah.
But it's the letter O of the Greek alphabet, which we do know.
Yeah, cool. Okay, so gun to the head. We didn't do a trade yesterday because unfortunately we were really busy. But just as a follow up from the previous day, there's not much good to say. Unfortunately, we were stopped out on a DAX short, and I was offside by 0.6R on Aussie US dollar. So not had a great week this week, Steve, on the old gun to the head stuff.
Is it non-farm Friday today?
It is non-farm Friday today, yes. So we are expecting
A bit of
some
volatility.
volatility. I don't know how much impact it's going to have. Obviously, it's going to sort of play into the thinking of the Fed officials. But with Omicron sort of front and centre, it may not have the same sort of impact as it normally does. We've also got Canadian employment at the same time, and at 3 p.m. we've got the US ISM non-manufacturing data and also factory orders. So plenty of data due out today, which could mean that we actually see some muted price action ahead of those data points later today. So it's going to be a difficult one again for us to end the week with the gun to the head trade ideas, but we're going to have to do something, Steve. I don't know what.
Yeah, I mean, I'm looking at oil. Oil is always a pretty volatile product over non-farm payroll. You normally get a bit of a spike higher, no matter what the number comes out as, flushes out the shorts and then moves lower. That's what it's always felt like. I mean, you do get the odd time that it does rally, but I think with the dollar strength, I think that will continue, and sort of that trend will bite in even after the noise of non-farm payroll. So I'm going to go for short dollar because I think we've got this level just below support level at 1762. Really, ideally, I'd like to sell a break of there. I know there's support at 1755, but really, I feel like we're on our way back down to this 1722 level at some point. It's just whether I can put this trade on without what's it trading now? 1767, without actually getting stopped out, and it probably won't happen because my stop is too low. That's the idea, isn't it?
It is the idea generally,
like
yeah.
So I'm going to go. My stop's going to be way too tight here, 1779, and I'm going to target a move to. I'm going to go for a 4-to-1 risk reward, which is a break of that 1722 support. Yeah, as I say, I'd rather wait till it sort of broke that 1762 level, and got the non-farm out the way, and then sort of like really focus on this drive lower with the dollar strengthening. But that's my play. That's my gun to head. So I haven't got a choice.
Okay. I'm going to take a look at DAX. So this is the hourly chart, just drawing this up now. As you can see, price action really since the start of the week has been pretty range bound and stuck within this kind of range between 15,025 to 15,446. So I'm just going to expect a continuation of this really. If it breaks out, then obviously, that's what we've come to expect from indices anyway. But given that it has been a bit under pressure, and as Steve mentioned, it's still below that 50% of the large impulsive candle that we saw last week, I still think there is a bit of pressure on the downside with this. So I'm going to set it at 15,312. And I'm going to target a move down to the lower end of this range at 15,025. In order to get a decent risk reward, I'm going to have to keep this stop loss quite tight. So I'm actually going above the high of the candle that we posted between 8 and 9 o'clock today. I mean, in an ideal world, it would be up above probably that spike there from the 1st of December, but then the risk reward just isn't good enough for me. So I'm going to go with that 15,446 as a stop, targeting 2.2R on that today.
Brilliant.
Cool. As mentioned, payrolls 130. Keep an eye out for that. They're expected to rise to 563,000 from 531,000 a month previous. We've also got the Canadian employment report at the same time. Then at 3 p.m. we've got the US ISM non-manufacturing number for November, and we are expected to see that fall to 65.2. So that is it from us for the week. Hopefully everybody's had a good week of trading, and we will be back on Monday morning.
Cheers, guys.
Take care. Bye bye.